Hi, everyone. You're watching episode 3 of Zapper TV. Hey, welcome back, everyone. It is Friday, June 11th, 2021. Today, we're going to be talking with Ryan Watkins, who is a senior research analyst at Messari. So as with every Zapper TV, our goal is to educate the next generation of DeFi users. And we have this opportunity today to talk with really what I think is one of the newer and leading voices as an analyst in the DeFi space. In case you're unfamiliar with Messari, if you're newer to the crypto space, they're one of the most reputable crypto data providers, and they also have a fantastic in-house research team, which you can subscribe to as well. So on that note, Ryan, welcome to Zapper TV. How are you doing?
I'm doing well. Thanks for having me on.
Awesome. We always talk a few minutes before, and then we pretend like we didn't, and I ask, how are you doing? So there we are, our planted question. Ryan, let's jump right into your background first, and then I want to talk with you more today about, what do the metrics on chain actually tell us about the state and health of DeFi? I think, we were kind of joking around, like the market's nuked the last month, really. It was about a month ago that we had this 50-60% drawdown in Bitcoin and Ether. And, anytime prices go down, there's a hysteria of people complaining, is this the start of some larger macro bear market? I want to get beyond like the prices today and the talk of whether we're about to go up or down. I really want to, again, focus on what are the numbers on chain which tell us what real DeFi market participants are doing? What sort of sentiment does it indicate to us about those that are in this space actually using DeFi? But before we get started there, Ryan, how did you get into crypto in the first place? And then tell us about how you ended up at Messari.
Yeah, so I guess first time I came across crypto was probably sometime in 2013. I heard about it through the Silk Road, but the use case didn't interest me. I was in high school at the time, and just kind of put it to the side. So maybe get to around 2016, I'm in college, and I hear people on Wall Street talking about blockchain technology, and I was interested in Wall Street, and I was like, you know what, wouldn't it be cool if I go and learn about this thing, and I could go into interview and kind of stand out? It's kind of that kind of dumb idea. And so luckily, a kid on my campus was starting a cryptocurrency club. He had 2 free tickets to go to Consensus in 2016, and I just went. Now, granted, I actually didn't end up learning anything from that conference because in hindsight, it was all about enterprise blockchain technology. And when I was there, I was just like, I don't get why people are comparing an enterprise database technology to internet. It just doesn't seem exciting. It was like Microsoft and IBM that were leading the discussions. I'm like, this is really boring. So it wasn't until 2017, interning. And I think many people, I just see the price action, particularly for Ethereum, and I'm just like, what in the world is going on? Because I just thought that all these assets were supposed to be scams or used for criminals or whatever was the mainstream consensus at the time. This is kind of what I defaulted to. But once I started to dig in, I just started to get really excited. I first learned about Bitcoin and started to question things I'd never questioned before, like what is money and how should institutions be designed. The idea of decentralization was pretty fascinating to me and something that was really counterintuitive at first, but interesting. This eventually learned about Ethereum and everything that was being built in Ethereum, particularly DeFi. And it's got to a point where I was like, as ambitious as it is for this space to reattempt how money works, it actually might be much greater than that. And it could reimagine how many of our institutions work. And once I got that insight, I was pretty committed to go into the industry full time. Now that said, I was still a month away from graduation when I got that insight, and I was already set to go into investment banking. So I still did that for about a year and a half, but in the meantime, was just kind of networking, recruiting, and eventually found my way into Messari, where I focus full time on probably it's DeFi these days, but also stable coins, and then I guess Bitcoin, Ethereum, because you can't really avoid those.
Yeah. It's funny. There's a common thread there in. I think the sentiment you had in 2017. I was also sitting through some conferences getting acquainted with crypto, and no offense to the enterprise, Ethereum folks, but I was just so bored out of my mind, and was like, this is really not, this isn't revolutionary. Like, it feels like we're just, we're trying to fit a square peg into a round hole. And anyways, long story short, I mean, those use cases actually have played out. They continue to grow, but no doubt, like, this is why we're talking about DeFi. It felt like this can have a greater impact on that many more people's lives, people who like urgently need access to peer-to-peer, natively digital, financial services. So Ryan, I guess like there's a lot of metrics that you've talked to me about, and I'm curious, like, what has been of greatest interest lately? As we're talking about like the prices drawing down, I guess, have you found any narratives that are counter to, of course, prices coming down? In other words, like indicative of growth in the usefulness and the utility of DeFi. Anyways, what are some of the numbers that you've been digging into?
Yeah, so I think one mental model that I've had or had historically about a bear market that I hadn't updated until recently was that DeFi is reflexive. Prices drive fundamentals, and when prices are going up, fundamentals go up. When prices go down, fundamentals go down. That was kind of like the working model I had. But I started to dig into the data, over the past month to see, all right, how much is that model correct? And while I think at a high level, it's kind of directionally correct, as in, prices going down definitely is not bullish for DeFi. At the same time, there's actually some nuances to the story when you dig into data. And when you look at it by sector or by project or by like strategy that a project is employing, there's actually some interesting results. So just to dig in a little bit, projects that have deployed on Polygon within the past probably 1 to 2 months have actually seen their fundamentals either deteriorate significantly less than competitors, or in some cases actually increase. So Aave, for example, TVL has been like increasing over the past month because it's deployment on Polygon. Yeah. Sushi Swap's volume have actually, in aggregate, have actually not deteriorated that meaningfully because it is doing pretty well on Polygon, and that's where there's a lot of activity. So that's kind of like one example. There's also projects for like Yearn, for example, where they're constantly rolling out new vaults that attract new users, and that has actually reached all-time highs in assets under management, which is obviously good because they get management fees on that. And I thought that one was really interesting because I thought something like a yield aggregator would be the most cyclical of the DeFi names. But I think we're kind of in this interesting period in DeFi where, yes, prices going down means yields go down as well. But prices going down probably means that people want to hold more stable coins. And I think we reached a point where like many people don't actually want to leave this ecosystem just when we're in a bear market. So they keep their stable coins in. And where they keep their stable coins, well, they put it where they can get the most yield. And in many cases, that's the lending protocols, or it's like Yearn. So if you notice, the lending protocols and let's say like Yearn as well, this is yield aggregator, their TVL has actually in some cases stayed flat or increased during this period, whereas maybe something like a DEX or some other sectors within DeFi have actually increased. So like that's kind of speaks to like the nuance of how these metrics have been trending over the bear market. And I think the final one, and I think this is probably what the sector that has fit this model the most, is basically DEXs, where obviously the reason why people are trading on DEX is because they want to trade, and what drives trading is just like excitement or volatility, and when those things start to decrease, obviously volumes decrease. So they've definitely taken the biggest hit from the prices.
Yeah, I noticed this morning. I was looking at the blocks data charts that they have up, which is at, if anyone's interested, it's at reputable.crypto.com/data. Just look for it. They have a whole DeFi section, and DEX volumes are up. And obviously, we're waiting on June to see what happens here, but May 2021 was the highest DEX trading volume we've seen to date. And I sometimes wonder whether, is it true, or am I in my own little bubble, as like a DeFi dad, thinking that DeFi is the future and we're going to bulldoze, all of traditional finance. I'm sitting around saying it really should be different this time. Whether we go into a bear market now or 6 or 12 months from now, regardless of that, in 2017, 2018, you were exiting into fiat. Very few were exiting into stable coins. Now, as you pointed out, the default system, the default finance system for many of us remains DeFi. So I'm exiting into stable coins. And I can tell you, like, my bank account and DeFi portfolio have a one-way relationship. Everything goes into DeFi and it rarely comes back out unless it's some bill. And that's a behavior that I think can be reflected in someone's case like mine, where I live in the United States and I've got a young family. But if you talk to Mariano Conti, we had on last week, he lives in Argentina. He's been living off of DAI for like 3+ years now, and he's always described this idea of, when I go into fiat, that's my alternative finance system. That's not what I want to be in. I want to remain in DAI. Ryan, is there any other metrics that you found surprising to look at over the last few months? Like anything that I guess wasn't what you expected in light of all of the markets drawing down?
Yeah, so I mentioned the one around lending protocols and yield aggregators, like that stickiness that was pretty surprising, which I think, to your point, is indicative of kind of that shift in how people think about traditional financial system versus decentralized financial system as like their kind of primary financial system. And when they're holding cash, they just keep it here, and they kind of put it in the banks that are in DeFi, which are kind of like Compound, Aave, and Yearn to an extent. I think the other one is around user growth. So in the case, there are some cases where like users are still growing for many of these different protocols, even in this bear market, whatever you want to call it. And that is, I think, in large part, or the biggest driver is, at least from what I've seen, this has been like layer twos, particularly Polygon, where for Aave or SushiSwap, like they are actually getting more users by deploying on Polygon, and that user base has actually increased during this period where there is, like, in theory, less activity in DeFi. And I think what it speaks to is that, and I think another kind of analogy I like to bring up is synthetics in 2019. Like 2019 was, it certainly wasn't a bear market. It certainly wasn't a bull market either. But you still had some cases where, like, there was like real development, and there's still real opportunities, right? Like, just because the market isn't just going one direction doesn't mean that there aren't opportunities to make money or that their projects aren't growing. And to me, I almost see like parallels here where, even though this market doesn't have just like a kind of just direction to it, these projects are still marching on, right? Like they're shipping new products. New people are using this stuff. So I think that was probably what's the most interesting, and it kind of highlights just kind of the differences between what a bear market may look like in 2021 versus 2018, where 2018 is just, all right, bubble pops, it's all vaporware, and there's really nothing to do. There's like no narrative to latch onto. Whereas now it's like, all right, well, these protocols are continue to get users. They're going to continue to grow. Builders continue to ship. There's a bunch of new narratives to latch onto. Like there's going to be layer twos, and I think that's to me like that is like the differences between these bear markets. And that's not to say that prices can't go down but it is to say that development will continue to go up.
Yeah, I had thought previously about a sort of mental model as well, where one of my fears in a future bear market is that a lot of the rewards that have, juiced incentives for people to get involved, those tokens are gonna, go down in price, and then as a result of that, the yield goes down, and then you start to lose some attention there. But I think, as you pointed out, when you look at like blue chip DeFi projects, something like Yearn, I'm like realizing, hey, if you're not going to exit, and if the real exit ends up being into stable coins, we're just going to see a flood of activity in terms of lending stable coins. And as long as, I guess, there's the demand to borrow them, I guess that's my follow-up to that is, have you thought about where does that demand to borrow come from? Will it just be, continuing to borrow stable coins for the sake of earning yield with a larger position? Maybe that is enough to sustain. But anything else that comes to mind for you in terms of applications that can flourish regardless of whether the market is up or down?
Yeah, so we'll see. I think one other nuance I'd like to add is that it will depend on how long we're in this kind of period of depressed asset prices, because I think there is a delay. So right now, we've only been in this environment for like a month, and to an extent, there's still hopium. Like there still is going to be people who want to go and borrow and lever long coins, or there's still like these new yield farms that pop up, like yesterday, and they offer 100,000% APYs, and maybe people want to borrow to go and farm those. In which case, activity will still be there. But like if we were to be in this environment for a year, maybe people would lose hope, and maybe there would be significantly less demand to borrow. In which case, the majority of you driving the yields is pretty much just inflation, and there's only so much that can drive yields before they get to like low single digits and not maybe high to mid single digits. So we'll see. I don't know. I guess we've yet to really see what DeFi looks like in a sustained bear market. Like we had that preview back in call it fall, where to be honest, it only lasted like 2 months and like yields collapsed. But like
it's a short time period. It's been a month. Like to remind everyone, like it's been a month since we had a major sort of correction. And last time when this happened in September, we didn't start to see prices move up for about 2.5 to 3 months. Really, like it took us into like January to see the rest of the market recover while Bitcoin was sort of surging. But so, this so far has looked pretty normal to me. But at the same time, like I'm not a trader. I focus on like, how can I put my idle assets to work? And there's been tons of opportunities. I write 2 or 3 tutorials every single week, many of which, I'm looking for triple digit yield. Now that yield might last a very short amount of time. It might last a week or a few weeks, but regardless, the fact that you can find it using stable coins, it's not like we're hopping into, some new token that we know nothing about. In many cases, there's high yield out there right now. And it's all that's required is that you have stable coins.
Yeah, for sure. And I guess maybe like as a follow-up there is that I guess maybe this is probably something that's a little bit more bearish, to be honest, about DeFi, is that
we don't have time for that, Ryan. I'm sorry. We'll just have to cut out then.
Sure, I forgot I'm on up only right now.
Go ahead.
Is that this really still is like a self-contained ecosystem. And right. I think what would be different is like in a period where people say lost a little bit of faith in DeFi because they overshot their expectations. But like there was still some kind of growth story that was tied to like, say like the real world, then like maybe it would be fine. But because it's kind of the self-contained ecosystem that in large part is dependent on speculation, at least the way it is today, that is something where, like I said, like a sustained bear market isn't a good thing, right? And all the fundamentals will deteriorate. Just to be honest.
Ryan, I wanted to ask a follow-up there to we've been talking at a more macro level about DeFi, but when you look at individual DeFi projects like Uniswap or SushiSwap or Curve, how do you evaluate whether they're a growing or I'll say whether they're healthy? I'm curious how you look at that, regardless of whether again we're in a bull or bear market.
Yeah, it's definitely an art. I'll say that up front. There definitely is no template, but that's also why it's just so much opportunity, because there isn't just some playbook that everyone can run. So I guess what I would say is, as far as health, I mean, obviously you want to see growth. So you want to see an increase in active users. You want to see increases in the key performance indicators. So for a DEX, that'd be like volumes and perhaps liquidity, although there's a little nuance there, especially now with like these more capital efficient AMMs. You got to see earnings growth in the case that there is some kind of fee switch involved. Those are some things I'd look for. I think as far as how that protocol fares from a competitive perspective, would like to see how its market share has run over time. So it's one thing if all those KPIs are going up, but if they're going up relatively less than their competitors, like say like Uniswap versus other DEX, say Uniswap was leading but other DEXs were lagging, then maybe that growth isn't as impressive because they're just the benefit of a growing market, right? That's one thing. And then so those are probably more on like the quantitative side. And then a big part of it just at this stage is really just on the qualitative, right? Because for one, like these metrics are, I don't want to say like ephemeral, but like they are definitely tied to market conditions, and they can change in an instant. So the qualitative part is also very important, especially considering how early stage these projects are. And a lot of that is just around just doing the work and understanding token economics, getting a sense of who are the best teams in DeFi, getting a sense of which communities are the strongest, and that's something that is really important because in the case, let's say that we have a lending protocol, like the community is what's driving like the risk management of it. So like they're changing the risk parameters, they're deciding what collateral gets added. So this is obviously like very important work. This decides whether in a Black Thursday like scenario, the protocol becomes solvent or it's still functioning. Like that's what's really important. So yeah, like the quality part is definitely, like I said, it's more of an art, and it's something that I feel like you just kind of learn over time, like what works and what doesn't work, and kind of like what matters and what doesn't matter. But yeah, like I said, it really is this is like an art.
So if we zoom back out and talk back at that macro level again, so when I think about Ethereum, of course, like this is the home base for DeFi. The majority of DeFi exists there, although like you mentioned, I think we've seen some really sustainable growth on Polygon. We saw a surge of activity on BSC in the last year, and so I think I'm wondering how do you see the significance of just the value that is settling on Ethereum? There is actually, what I should show here is there's a great chart from moneymovers.info, I think is what it is. Mm-hmm. And there we go. So this is a chart that gets referenced a lot. It refers to what's the value that's being settled on Ethereum versus Bitcoin. I'm curious, like you're someone who you also think a lot about Bitcoin. I guess, like, is this just the future? Like, when I look at this, I was born into a space where Bitcoin was such a dominant narrative, even though I obviously fell in love with Ethereum and eventually committed to working in DeFi. But I mean, even for myself over the past year, it's been surprising to me to just continue to watch a surge of activity grow on Ethereum versus Bitcoin. So I'm wondering, like, how do you make sense of this metric? Is it worth comparing the two, or is this too much of an apples versus oranges scenario?
Yeah, so I think back, I think that the first time I looked at this metric was back in March 2020, and the reason why I looked at it is because, well, I think the first thing I saw was like stable coins just growing like an insane amount in 2019 and then in the Q1 of 2020. And I just wondered, like, how much value that is being settled on Ethereum every day is stable coins. So I put that data together, found out that stable coins were becoming the dominant medium exchange on Ethereum, which actually is no longer the case today, which is interesting. So that's how she kind of flipped again. And then I was like, you know what? Well, if stablecoins are, this currency is being used this much in Ethereum, then it probably makes sense to include it when we have discussions about how much value these blockchains are selling every day, right? And to me, like, it has always been like the cleanest measurement of how much this blockchain is being used, right? It's like, to me, it's the best measure of economic activity, and it's the one that's hardest to gain. If you're moving $50 billion a day, it's because you're moving $50 billion a day, right? It's not like transactions per day where that can be gamed by a blockchain with low transaction fees or some of these other metrics. And I think another part of it is that, so the way I think about Ethereum is that it is an economy, and naturally, like, what I want to see in an economy, if it's growing, is that, like, people are spending, right, and using all this stuff. So that's what that measurement has always been to me. And I think as far as like how it compares to Bitcoin, to me, it just shows that it highlights the differences between the two, blockchains. Is
right.
Ethereum is really supposed to be this economy, whereas Bitcoin is more focused. It's really just supposed to be this store of value, and that what that number tells you for Bitcoin is just like how much Bitcoin people are setting back and forth, right? But like that's not that's all it's used for. So I guess to me, it definitely is still apples to apples, but I think the trend we're seeing and how those are developing are indicative of the two different paths these projects are taking to adoption.
Yeah, I'd encourage anyone, go to, it's money-movers.info, and then the one that I just pulled up here is cryptofees.info. This is by these are supported by, his name's David. I don't know how to pronounce his last name, but it's Mihal. So thanks to him for making these available. But yeah, it tells us the demand there is to actually transact. And when you look at this, especially the cryptofees.info, this is where we're talking about fees that are being earned by the protocol. So there's a utility tied to Uniswap and SushiSwap. I'm paying whatever fee to actually trade. We're no longer talking about just the fee to actually transact on the blockchain that gets paid to a miner. And I don't know, end of day, I love, there's an analogy I've heard of, like, if there's a restaurant and it's got a line out the door, that's an awesome business. Everyone's willing to wait in line and they're willing to pay however much money to eat there. You just can't replicate that by copying the restaurant and putting it down the street and saying, hey, we've got tons of room here and it's cheap, or even like we'll pay you to come here. That is really the sort of battle we've seen with what's happened with DeFi on Ethereum and some other chains. But then I think you've seen these real success stories with like a Polygon recently. Polygon has been very collaborative with the Ethereum community. And as a result, they've got these really strong partnerships with a lot of projects wanting to launch liquidity now on Polygon. Ryan, I've got one last question for you. We haven't talked about like the almighty metric in DeFi, which is total value locked. So I should probably pull up DeFi Pulse. What are you thinking of recently in regards to total value locked? Like what's something what are some of the factors that contribute to number go up or down here? When we look at, so actually, in case anyone's unfamiliar, think of this as like, this is the total value of assets that people are trusting in smart contracts. The aggregate value, according to the projects here on DeFi Pulse, is around 60 billion. You should also check out DeFi Llama. They've got lots of other projects there that may or may not be listed on here. But Ryan, how do you make sense of this, like in light of like the last month here? So like this was the major drawdown. It was around the 17th. Like we were already headed down, but this was it. And then where we are here, and this is based on USD. If we flip over to ETH locked in DeFi, this is what it looks like over the last 30 days. And then it's worth considering, I don't have the chart up here, but the amount of ETH that has been locked in the ETH2 deposit contract has continued to trend up and to the right. So that has been, I think, one of the metrics that I've been focused on as being a positive, that folks are locking up their Ether, to stake in ETH2.
Yeah. So I guess total value lock, I've always had I've always flip-flopped on it because
it's okay. We can criticize it too. Like, tell us your criticism. What are the pros and cons of total value lock? Let's start there.
Right. So I think the pros of it is that it tells you. So the reason why I think it's a useful metric in aggregate is because it tells you how much money are people entrusting to smart contracts, right? To me, like that is a very strong measurement of adoption of decentralized protocols, right? Like if someone were to tell you a year ago that we were going to have at our peak, like almost $100 billion of assets that were, being essentially custodied by smart contracts, you'd have been like, well, that's insane. I couldn't believe it. So that's the reason why I think the metric is good. It almost is like a measure of how much like the world is trusting DeFi with their money. I think my criticism of it is that is when you start to use it on an individual level for competitive analysis. Because I think there's a lot of nuance there. So, for example, you could go and see, and not to pick on projects on Binance Smart Chain, you can see like a new project on Binance Smart Chain that overnight can go and accrue, let's say like $1 billion or $2 billion in total value locked, right? And someone will be like, oh my God, this thing has just as much total value locked as insert DeFi blue chip. It should be worth the same amount. And it's like, well, no. There's differences in the level of stickiness with this TVL, right? Like a lot of that capital might be more mercenary in nature, right? They're not there because they think it's the best place to park their money, for a long time. They're there because they think they can just get some high yield for maybe like a day or a week or however long until that yield lasts, and then they're out, right? And then two, it almost becomes, within that context, it also becomes a thing where people like overemphasize the importance of TVL and de-emphasize some of the other important factors in what drives prices and valuations and growth in the long run. And then the final thing I'll say about TVL is that it really needs to be properly contextualized based on the use case and sector for the project. So for something like a decentralized exchange, total value locked isn't really everything, right?
Not at all.
The goal of a decentralized exchange is not to just put a bunch of assets in a pool. It's to facilitate trading, right? So I think Uniswap V3 kind of highlights this. The nuance with that metric is like, well, Uniswap V3, it doesn't have nearly as much TVL as Uniswap V2. I think right now it's maybe like a fifth or a sixth of the total value locked. But it's doing way more volume, right? So if you were to just go off that total value lock metric and then compare the two, or compare Uniswap V3 to, like, say, a Uniswap V2 fork, you might reach well, no, you will reach a wrong conclusion about which one is being adopted more. Because you're like, oh my God, this thing has $5 billion TVL, this one has 1 billion. It must be a better project. It's like, no, that's not the purpose of it. And I think the last thing I'll say there is that, and I think what that point speaks to is that these projects, they have different ways of capturing value from that total value locked, right? Like the total value locked in a DEX only matters to the extent it's used to facilitate trading, which drives fees. The total value locked in a lending protocol only matters to the extent that it's used to drive lending, right? Whereas maybe something like Yearn, I think total value locked is a great metric to track because they actually get a management fee from that total value locked, right? So like that actually will tell you, how its fundamentals are trending, and like it's the earnings potential of the project. So.
I would encourage anyone, if you are not familiar with the nuance of Uniswap v2 versus v3, go to learn.zapper.fi. We've got a whole article there on concentrated liquidity provisions, and it's proven in the numbers, as you pointed out. The trading volume is much higher now already with just a fraction of the total liquidity that is on Uniswap v3. I think it's also worth noting, so SushiSwap still has the legacy model that Uniswap v2 has, so it's not concentrated LPs. But I noticed it was one of the blocks charts there. It's crazy, like the amount of trading volume they've been doing as well. And so, you have these dominant automated market makers, and like the fact that they've actually had record numbers is really should not be a surprise over the last month, because as we all lived through the last bear market, the numbers were outrageous in terms of trading volume on the bloodiest days. It's just that centralized exchanges enjoyed the returns from that. The difference is now is that with all the trading volume we have in DeFi, now if you look at AMMs as a community-owned exchange, now the community benefits from that. And I think it's going to be wild, like to look back years from now and to realize like this was really, I think, the end of the centralized exchange dominance. Like I think we've seen it in the past year, the growth behind Uniswap and like a SushiSwap. And other AMMs on other chains too. There was, God, Ryan, I don't know if you've checked out like Spirit Swap on Phantom was one that I checked out. They were doing, in terms of trading volume, I want to say it was like 50 to 100 million. Recently, they had like a record day. There's been obviously outrageous trading volume on BSC over the last year, especially Pancake Swap, and then. Now we're seeing everyone deploy liquidity like SushiSwap to Polygon. So, the world is your oyster. If you want to trade, you can trade on essentially any chain right now, even though there is notably more activity on Ethereum.
Yeah, totally agree.
Ryan, anything else that you think we should be tracking? Any other like metrics that you think are worth keeping an eye on in terms of the on-chain metrics?
Yeah, so I think the last thing to keep on is just this development on other blockchains other than Ethereum, to be honest. And that's both layer 2s and side chains, and also just computing smart contract platform or even application specific blockchains, because the growth of those has been very impressive. In some cases, obviously, it's just copycat. But in other cases, there actually are like real exciting projects in traction. And I don't think they're slowing down anytime soon. So it's not even just from the perspective of there will be opportunities for people to go and explore new projects, but it also just gives you a sense of where this ecosystem is going, right? Like there's going to be increasing amounts of activity that takes place off of the Ethereum main chain. And those are some of the biggest opportunities both for investors and for projects that think about where to deploy next.
Yeah, and excited to see those bridges between chains become more frictionless. So a reminder, if you've never tried Polygon, for example, you can go to zapper.fi/bridge and you can within 1 or 2 clicks, you can move assets over, and then we'll have support there sooner than later for BSC, Phantom, XDAI, and other EVM compatible chains. But Ryan, thanks so much for your time. This was awesome. In case anyone is interested to learn more from you, they should definitely follow you here on Twitter. Ryan, any other contact information they should have if they want to get in touch with you?
No, I think that's it. Other than that, I'd say just you can catch my writing and every other analyst writing on Messari Research. And I think maybe one final note is that we actually just released a piece talking in large part about many of these metrics we talked about and how they performed during the bear market. The analyst Mira wrote it, so definitely check that out as well if you want to dig into this topic more. That's
awesome. And they can go to Messari.io for that. What section is that in? I know I'm looking at it here. It's like there's a research tab, I think. Right?
Yeah. So that'll be under research.
Yeah. There we go. Yeah. Go to Messari.io/research to check that out. Well, everyone, thanks for tuning in. As always, subscribe at tv.zapper.fi. You can watch any future and past episodes there. You can learn more about DeFi at learn.zapper.fi. So we've got everything from basic posts on like the fundamentals of DeFi, defining like what is a stable coin, what is yield farming, and so on. But we also post lots of tutorials there as well. If you want to set up your first MetaMask wallet, or if you're looking for more advanced yield farming tutorials. And we'll be back next Friday around noon. And thanks so much, everyone, for tuning in. Ryan, I'm going to hit the little animation here, and then we'll be back in the green room. But thanks, everyone. Have a great weekend.
All right.